same rate as paper money.
So that's gold. That's one of them, I'm sure. Now, you said before...
copper actually, as well, and oil, anything.
But I want to talk about
land.
gold prices in particular, though, because, Marc, recently you made a statement saying that maybe gold prices will probably never fall back below $1,000 an ounce.
Well, basically what has happened, the gold price went up from $35 to $850 between 1970 and 1980. Then we went down to around $251 in 1999, $255 in 2001, and now we're at 1,146. The 1,000 level was first reached, I think, 18 months ago, and then we traded in a range of, say, between 850 and 1,000. So the 1,000 level was a resistance level, technically speaking. Now we've broken above the $1,000 level, and it becomes a support level. I think that support will hold.
Marc, now quickly, 20 seconds here before we get to commercial break. What about 2,000? Those people say 2K is just around the corner. Are we going to hit that maybe in 6 months from now?
Look, the price of gold could be $1,000. It could be $10,000. It could be $100,000. It could be $1 trillion. All depends on Mr. Bernanke, how much money he will print. My view, he will print and print and print, and the sky will be the limit for things like also equities. You can go on a Dow Jones to 100,000 or to $1 trillion if you print enough, of course. And the same for gold.
Well, Marc,
I think the price of gold will outperform stocks.
As an investor, when you have been listening in terms of what has been said at APEC and what Obama and President Hu had to say yesterday, has anything at all piqued your interest?
Well, basically what has interested me a lot is this relationship between China and the U.S., where the U.S. is asking China to essentially move North Korea to a more friendly tone and also try to negotiate or try to help in the relationship with Pakistan. It should be well known to anyone who follows Asian politics that basically North Korea could never build nuclear weapons unless the Chinese would do it. How can a country that hardly can build bicycles build nuclear weapons and then sell them around and also encourage other countries and help other countries to develop nuclear weapons without the help of China? It's a total joke to ask the Chinese to help with respect to North Korea. Equally, it's a joke to ask them to help with Pakistan, because they would like to have a Pakistan that keeps essentially India busy. So India is busy on the Western Front, just in case that China and India would have some conflicts at some point in the future. So I think the whole trip, and you could not expect anything else from Mr. Obama, it's no change and no improvement, and nothing has been achieved. It's been, in my opinion, a total failure, except for smiling a little bit. But the Chinese didn't smile very much, that I can tell you.
No, they did not smile very much. And today we had a PBOC advisor coming out and pointing more fingers, in fact, at the U.S., at the Fed, saying that because you're keeping your interest rates so low, people are using this as a carry trade and fueling these asset prices, possibly bubbles here in China. But what do you think? Are we at a bubble?
Well, look, it's very difficult to value anything when interest rates are at zero. If interest rates are at zero, and the Federal Reserve has come out essentially saying that they'll keep them at this low level for a very long time, then I would say a lot of shares in Asia are not terribly expensive because they have dividend yields of 4 to 6%, and it's very difficult to tell whether there is a bubble. I mean, I personally, if you tell me the US dollar has zero interest rates, and you can buy oil or gold, what do you prefer? To have it in US dollar at zero interest rates or in gold? So I think that as a responsible citizen of the world, everybody should own some gold. And I also believe that over time, other central banks in Asia and emerging economies will follow the example of the Reserve Bank of India and acquire gold.
Mark, we're running out of time here. I got one more question for you. You said back in September that the stocks may have peaked for the year and we might see another 20% decline from here. What do you think at this point? Are we going to see that decline at some point?
Well, I think that any decline towards 900 on the S&P will be met by more stimulus by the U.S. government. In other words, there will be another fiscal deficit increase, and at the same time, the money printer will be ready to run the money printing press in overdrive.
Right, so stocks will
So
only
I don't
go
think the
higher from
S&P
here.
will drop below 900, and I think eventually will go higher in nominal terms, and that is not necessarily in real terms.
Mark, what a pleasure. Nice seeing you. I expect to see you back here in Hong Kong next time. Thank you for that. Marc Faber, publisher of the Gloom, Boom, and Doom Report.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg Radio. Copyright Bloomberg LP 2009.